So it is July 2025. What's going on in the local housing market? So you'll see from some of the stats that a lot of these are national, but we're starting finally to feel some of the pressure, I would say, locally. So, when you look back from about 10, 15 years ago, the amount of buyers and sellers that were in the market has definitely shifted. We are seeing more sellers nationally than buyers, out there. So in our area, I think we are seeing less buyers, but also less sellers. And that's going to play, I think, a big role into our market. So the Associated Press said fewer buyer means less competition for home listings and more pressure on sellers to dial back their asking price and make other concessions to help get a deal done. That's a stark reversal from just a few years ago when it wasn't uncommon for homeowners to receive multiple offers well above their asking price from multiple home shoppers. So this is interesting here locally. We are still seeing some properties go highest and best, and some things that we thought were priced right are sitting. So demand is still there. I just think buyers are being a little bit pickier right now. So I think that it's important that we get the property together or price appropriately. I was listening to a reel, and they basically said homes will still sell. It has to either be priced right, location has to be phenomenal, or has to be in great condition. You got to get those things to match up, and I think that's important. That's our job as realtors to really guide you through that. Andy Walden, head of mortgage and housing market research in Intercontinental Exchange, we continue to see inflection in the housing market as home prices soften and softening expands beyond the Sun Belt into the West. With inventory levels beginning to normalize across much of the country, prospective home buyers are finally beginning to see some long anticipated price relief. How does these things nationally really affect us is when you see them on television. Consumer confidence, I think, plays the biggest role in here. If consumers are thinking, hey, something's going on, the market's soft, and they're hearing this on television, they're going to pull back locally, even though our local market may not be, and it kind of will be, getting us into that position. If rates drop 25 basis points, it doesn't change much financially, but consumer confidence will probably peak up, and we'll see kind of a little bit of renewed demand. Home price growth is decelerating. This has been the case really since 2022. Nothing really uncommon here. It means that basically, in 2021, we were seeing 10-20% growth a year. For our numbers, we probably have seen, maybe about 5 to maybe 10%, depending on the year and depending on the location. So 22 of the 50 largest metro areas have falling home prices. Well, there are almost half of them are falling, but New York is actually the second highest at about 4.3, let's call it, of growth. Makes sense. And this is what we're seeing here, where there are other areas. So Austin, Texas is probably seeing down a little more than 5%. We're up about 4%. Now, like I said, 4 years ago, that was up 10%. So we are seeing that deceleration, which is kind of normal. Greg McBride, chief financial analyst, Bankrate, said home price appreciation will be tepid. When looked at from 35,000 feet, with many markets seeing little to no change in prices, but rising inventory has come some formerly hot real estate markets shifting to a seller's market to a buyer's market and will be susceptible to price declines. I do think that we are going to have a low inventory for a while to come in our area. Our area is not so transient. It's really kind of stronghold. I've said the first-time home buyer in our area is probably between 35 and 40, where a lot of other areas, it's really 25 to 30. So, you're longer in your career. You may have children already. You're not as likely to jump up. And our $800,000 house to $1 million house, you don't get much difference where, 200 to 300 in other parts of the country make a big difference. So you're not going to see, I think, that huge influx of inventory. There is an uptick in foreclosures, but not dramatically. So, what we're seeing kind of an average between everybody of what they feel nationally, home prices will increase about 2%. I do think we'll probably see anywhere from 2 to 4% here locally, which is good. Once again, we'll take growth. We'll take sustained growth. We are going to have a little bit less demand. Like I said, sometimes it is, an opportunity right now for a buyer if you've been looking for a while to stay in the game because not that you're going to get a deal, but you're going to be able to get a house without going, $200,000 over the asking price or bidding against 20 offers. Maybe you're only bidding against 1 or 2 offers. Looking ahead through the rest of the year and into 2026, we don't expect mortgage rates to come down much, at least not through the third quarter of 2025. So affordability will remain pressured. James Egan, housing strategist, Morgan Stanley. I think everybody agrees, there is some political stuff going on with that, but we don't expect to see major mortgage rates come down, maybe 25 basis points, 50 basis points, but nothing dramatically. The cost of a house will generally be the cost of the house over the next, call it 3 months at least, maybe even 6 months. So what they're kind of expecting for the end of Q3, 6.68, probably a little bit below where we are today. Q4, 6.62. By Q2, so a year from now of 2026, they're thinking 6.53, so really just down 25 basis points. So they're expecting these rates to really hang tough for a while. So I think with that's the case, it's what do you need to do to be able to afford? How do you get into things? What makes sense out there? And that's where kind of looking individually will really dial in, and we're happy to set up those consultations with you. Mortgage rates, we said, are supposed to remain in the sixes. The prospect of elevated mortgage rates throughout 2025 suggests the housing market activity will continue to be challenged. It's very true when we look at this that we need to make sure that there is going to be a little bit less demand. I think there is less supply, but less demand. So how do we balance it out? What do we need to do? And every home is specific. And what's more important? Do we just sell it a little bit cheaper and be out without doing work? Or do we do some work to it and make it, as best as possible to maximize the return on investment? So sales will remain low, but up slightly from last year. 2025 existing home sales as of July 2nd. So 2024, we were 4,067,000. The projected right now is anywhere between, say, 4.15 and 4.3. So we're going to be up a little bit. And I think that comes from the national level where less homes are being bought in soft areas. And in our area, there is less inventory to be bought, even though demand is higher than a lot of other areas. So that's an interesting aspect where I did think we'd get up probably around that 4.5 to, maybe even 5 million by this point when I was talking about these things in 2021. So, home sales are still as a whole remaining low. So it needs to be done properly, I think, giving good strategy. So any questions you have, the market is nowhere near in bad shape. It's just shifting a little bit, and happy to discuss kind of what's going on for you individually and how to get you in the best possible position.